Good morning, traders. Welcome to this live commodity strength indicator table with me, John, on this Thursday, the 3rd of August. So, full tables today. Looking at the trend traders and the day traders today, the pound has just come on as a correlated currency. So you could potentially look at some pound pairs today. I would just say, actually, personally, I would avoid pound today. We do have a Bank of England rate decision coming up at 12 p.m. So I would probably avoid anything to do with the pound, especially in these type of market conditions that we've got at the moment with regards to that high volatility, low volume situation. It means that basically these moves could be exaggerated in the market. And if you're on the wrong side of those exaggerated moves, it can do some harm to us. So I'm going to avoid the pound today. I'm going to take a look at the other pairs that are showing up, including what we talked about slightly yesterday with regards to Aussie US dollar, as that remains the top of our tables on both the trend traders and the day traders side of things. Now, the only problem with that is that market has continued to move lower. It hasn't pulled back yet, giving us that opportunity. So if we just have a quick look at Aussie US dollar on the right hand side chart here, I'm on the daily time frame. You can see that via chart partner in the top left hand corner. Price is approaching that 0.65 handle, which was ultimately our area of targets yesterday. We were looking to see if we would get a pullback into the 0.6630 area to have a look for a potential short in and around that level. We had some nice confluences there with regards to the trendline resistance, prior lows, as well as a fib level at the time at that point. So I was looking to see if we would get a move up to that, whether that news from the dollar would have pushed the price into our level of interest. However, it had the opposite effect. The news was pretty good for the US, and it pushed the dollar stronger, causing that price to move even lower. So unfortunately for us, didn't quite get that. We could still obviously wait for that opportunity to come. If price does pull back a little bit further, there is still potential for it to come back into that trendline resistance for a continuation. Problem is now we're very close to our target area. So if we were to look for any kind of short in and around here, we've only got 25 pips to target. So it's not really viable for any kind of opportunity there, especially because ATR is suggesting around about a 77 pip stop there. So Aussie US dollar a little bit off the table, same with Kiwi dollar, because price has come back into again that target level of interest, which was the 6.075 handle, these prior lows here back in June. So I wanted to see if price would retest that. Now we could look for the option for price to pull back again. That 61.40 still remains a bit of an area of interest. Again, we have trendline confluence coming through there, and what we could look for is potentially shorting from that point. First targets could be these lows, but second targets could be the 0.6 handle beneath it, which would give us 140 pips to target with a 70 pip potential stop loss. At least we could probably gauge a 1 to 2 risk reward ratio out of that. So again, I'm just actually going to set an alert back up here. Just again, a caveat, I'm back on that demo account. I've tried to log into the live account, but the data's still not showing up. So I've had to message Pepperstone to see what's going on there. So unfortunately, I won't be able to bring that one up for a moment. But you can see price hovering around that 6.75 at the minute. I would like to see that pullback to give us a potential opportunity into this market. Now we can see Euro is fairly strong as well. We've got Euro sitting in that S2, and we did take a look at Euro Aussie going into yesterday's market. I did set an alert down at the 65.40. The reason why I set that, if we just go to the hourly time frame, was that it was these kind of prior highs, and at the time the 50 moving average was kind of coming through here. So I thought maybe we could get a pullback to the 50 MA before looking for an opportunity long. That hasn't happened. Instead, prices continue to the upside. So I'm going to just move my alert up to the upper range of this of the range high, just to see if we do get that pullback possibly into that level there. Now, what I could also look at is the Fibonacci as well. So if I just grab in that Fibonacci retracement tool there, and just go from the swing low to the swing high. You've got the 38.2 coming in just at that previous spike high, so that could be a nice area to see price come into. So I'm actually just going to move my alert up to that 38 spot to see if price can come back in, and then we'll assess what's going on in terms of, is Euro still on the tables? Do we have any kind of buy momentum coming into this market from a lower time frame point of view? Going on to Euro Kiwi then. So again, I've got an alert down at the 78.80 area. Looking at the daily chart at the moment, we are very close to that target area of the 1 spot 80.75, these kind of key highs through here. So again, just kind of being a bit cautious with these market conditions at the moment, setting alerts rather than diving in straight with buy limit orders and things like that. But you can see here, looking left, we do have this kind of consolidation, key prior highs coming in around about that 78.85. If I go to an hourly time frame, you can see that kind of in a little bit more detail there. So I've set an alert there as well, looking to see if price can pull back. So yeah, a little bit choppy, the Euro Kiwi though. Now, we have had Swiss come back on the tables as S3 is S2 on our trend traders. So I was taking a little look at Aussie Swiss, and I think actually this market does have some potential for further downside. Now, if I go up to the weekly chart, we are trading within a kind of bearish channel, and we're coming towards that bearish channel low. We do have a key level coming in at the 0 spot 56 handle, so again we've got a little bit of room to go, maybe 100 pips or so, but I do like the opportunity here for a potential pullback entry. The major lows come in around about that 53.50, 53.75. So again, could we see price drive into that level there? Now, price has traded through the prior weekly lows at the 0 spot 58.50, looking for a retest continuation. If we go to the 4-hour time frame, you can see we've kind of consolidated around that level after trading through it. Nice trend line resistance as well, and then price has continued. Sorry, this is the 8-hour time frame. If I go to the 4-hour time frame, this is where I'm looking really to see if we get any kind of entry points. Again, if I just bring in that Fibonacci tool, Fibonacci retracement tool, I'm going to go from the swing high down to the current swing low. Now, this obviously swing low could change at this point, but I logged the 38.2 area. Yeah, is prior lows. It's had some rejections there before. It's around about the 57.75. I think if price comes back into that area again, setting alerts, 50 MA coming through that at that point might be an interesting point to look at, because if we kind of look at what price has done around the 50 MA before, it's kind of rejected and moved lower. So I like the idea of maybe price pulling back into the 38.2, 50 MA runs through there. If it trades through it, hits the trend line and then comes back through, that could be a good opportunity to start looking for that short back down to the downside there. Kiwi Swiss, fairly similar. The only thing I'd say about Kiwi Swiss is if we go to the weekly chart, we are very close to the 0 spot 53 handle, which was the low that was set back in 2020 after COVID, or the COVID sort of drop. So we're really close to that now, close to the all-time low. So I'm a little bit against that. Unless we kind of come back to the high at the 0 spot 54 handle, a 55 pip stop would bring us above a bit of a level, and you've got like 100 pips to target then, so you've got 1 to 2 risk reward. It's just we are very close to that all-time low, so it's not usually a good option to look for. Now, finally, just an update on Pound Aussie. If you are in at this 91.50 handle, you were around about 300 pips up. Really good time to take some profits off the table there. Again, Bank of England coming up at 12 p.m. So you want to start managing that risk now. You want to start either taking some profits off the table, bringing your stop losses to break even, or you want to be looking to close out 4 positions. And then if another position presents itself in the future and Pound Aussie remains on any kind of table, and maybe you could look for a position. The problem you've got now is they're both on the same side. So you've got a weak Aussie, weak pound. Usually that's a hard exit for us as well. So at the time, we had pound as strong, Aussie as weak. We've now starting to see the opposite effects now with terms of pound coming onto the weak side of the table. So that would be a hard exit for me. And we would have banked that 300 pips this morning. So hopefully you enjoyed the video content, and I'll speak to you in the next video.